Good call. Thanks for that, Corinne. Okay, so firing it up now. We have the revenue cycle. So no secret to any of you that transaction cycles are going to be arguably the most important section. And I always say when we are going through the audit section that you need to really slow this down, because unless you've been an auditor for 20 plus years or you've really gone through this and you're fluent in the language of auditing, it becomes really tough to really process what the auditor is actually doing, because there's so much, there's so much terminology. It's really a foreign language. Nobody understands what.
就对，我正在上听，出去把门关了。你在我这弄一圈，全给我收拾了。
Everybody could mute their computers. That way I can go through this and we can make this as efficient as possible. That'd be great. Appreciate it. Thank you. But yeah, so like I was saying, really important that we understand conceptually what's happening here. Because like I said, unless you've been an auditor for 20 plus years, it's really tough to understand the flow of an audit engagement. So just when we're going through it, we're diving right into the middle right now, just because I think for those of you who are retaking audit, this is an area that a lot of candidates really struggle, because this is ultimately the meat and potatoes of the audit engagement. This is where the auditor is performing their actual work. They're obtaining evidence to come to their opinion. Okay, right? What's the whole purpose of an audit engagement? It's to opine on management's financial statements that they have prepared, right? While this is the audit exam, it is also the assurance exam. We're also going to be covering things like attestation engagements, review engagements. Okay, but the bulk of the content that is tested has to do with audit engagements. And when I say we're going to talk about the flow and how important it is to understand the flow of the audit engagement, it's really important to understand, okay, where are we right now, right? We start by coming to terms with the client. That has to do with the engagement letter. There's so much documentation that the exam tests you on, whether it's the engagement letter, whether it's the auditor's documentation as they're performing risk assessment procedures, whether they are, planning the engagement. There's the management the management representation letter that they are going to provide. And there's so much context within all of this documentation that it's just really important to understand, okay, what's the purpose of this document? Okay. And then as we've accepted the engagement, we're now going to move on into the planning and performing of the actual engagement. Like I said, we are going to be delivering. What's the deliverable here? If this was your client, what's the whole name of the game? We're going to be providing this report to their financial statement readers that says, hey, look, these financial statements look good. Feel free to invest in this client. Feel free to loan them money, whatever it is that you plan on doing, and why you need to understand these financial statements as you're being the primary financial statement readers. That's kind of the whole idea. So we have the preliminary phases, we have the risk assessment phases, and now the auditor has said, okay, we understand the risks, whether it's due to fraud, whether it's due to audit risk. We've gone through maybe some sampling to understand where there's some materiality risk. And now we're going to be diving into the actual testing and the obtaining of audit evidence. So there are 3 steps here in our mental map. Let's see if I can get this sort of, okay. So 3 steps in our mental map here that you really need to focus in on when it comes to transaction cycles. And when we're talking about the revenue cycle, we have, when we're talking about the revenue cycle, we have this concept of testing internal controls and then performing substantive test of details. And those terms kind of get confused by a lot of students. They're like, okay, what's the difference between testing internal controls? What's the difference between performing substantive test of details? And the reality is that they are totally different. Okay, so when breaking this down specifically related to revenue, we're basically trying to understand whether or not management has overstated revenue, right? That's the risk. The risk that management is going to inflate their revenue and make their top line look better than it actually is. Okay, so in step 1, we need to first understand management's internal controls. Okay, so testing internal controls, while it's not going to provide sufficient appropriate audit evidence to come to an opinion, it is going to kind of allow you to understand, okay, is there a proper segregation of duties? What is management doing to create documentation that we are ultimately going to test and how, and are they doing a good job? Okay, so when you think back on audit risk, and we'll cover this later on, we're thinking about inherent risk factors and control risk factors. Okay, so ultimately we want to know, okay, is each department properly doing their job? And can we trust the documentation that they are populating ultimately when we test this and obtain our audit evidence? Okay, so understanding the different departments per cycle is going to be really important. But instead of just memorizing the different departments and segregation of duties, you know, these terms that are sort of, you know, they're tough to really understand. Instead of just memorizing that, think about what it is each department is doing. Okay, so when we're talking about revenue, each department is going to create documents. Okay, so that's step 2. And we need to think about what is the document they are creating and why is that document going to be important for us, the auditor, when we're performing our tests. Okay, so then step 3 is going to be the actual testing and obtaining of audit evidence. That's the substantive testing. Okay, so when we're thinking about the transaction cycles, you're going to hear all these terms, right? You're going to hear things like, you know, transaction level assertions. You're going to hear account balance level assertions. So when you think about those terms, and then we also have presentation and disclosure, okay, but instead of just, again, memorizing like the fact that this is transaction level assertions, whatever that means, you know, and just memorizing all the different assertions within that, think about what it is the auditor is testing. Because I think what a lot of students do, and what I've found over the years, is that students ultimately try to memorize the different assertions within, and what specific test is related to that assertion. And that's just a one-way recipe for memorizing your way through all this. And that's just not how you're going to pass audit. I think it's very tempting to try to memorize your way through audit because of how conceptual it is. And there's all these terms and you're like, okay, cool. Management is performing, you know, or management is you know, saying that this is an assertion related to completeness. What's the completeness test? Tracing. But like, that's only going to give you a 40 to 50% chance of getting that specific question right. You want to give yourself an 80% chance or greater for each question that you're going to get it right. You're going to give yourself a little bit of room for error and fatigue. But at the end of the day, you want to be as confident as possible and understand logically why it is management is making this assertion or why they need to make this assertion, and why it is the auditor is performing a test on this assertion and coming to an opinion related to this assertion. Okay, so when you think about transaction level assertions, well, first of all, let's think about what the word assertion means. Okay, so this is also something where I know it sounds intuitive. It sounds sort of, it's annoying to think about like at that much of a granular level, what these words actually mean. I mean, it's not a vocab test, but it is important. So thinking about what an assertion is, this is a statement of fact. Okay, that's the definition of an assertion. And a statement of fact is saying, okay, with that, we are unequivocally saying, without a doubt, that our revenue is completely reported. Nothing has been left out. When we're saying that this meets the cutoff assertion, we're saying that everything is in the correct time period. When we're saying everything exists, we're saying that what you see in the financial statements exists. There's supporting evidence. Look at our source documentation. Go ahead and vouch backwards and see that for yourself. So with that being said, understanding that it is management's responsibility to make an assertion, and it is the auditor's responsibility to obtain evidence and opine on that assertion. Okay, so when it comes to transaction level assertions, this is an assertion related to the income statement, more or less. Okay, so when you're thinking about revenue, this is a sales line item. Okay, so this is your top line. Really, really an important cycle to consider, because this and the expenditure cycle, because those two cycles have to do with the profit line. Okay, so when you're trying to misstate the financial statements, when we're thinking about the risk of financial misstatements, what's the key area that management or a company would most likely try to materially misstate? The bottom line, right? The profits. So revenue versus expenditures are going to definitely be a risk of material misstatements. So we need to really focus our attention on revenue and expenditures. Okay, so thinking about the income statement level assertions or transaction level assertions, when it comes to revenue, we're thinking about the income statement, we're thinking about revenue. Okay, so when we think about account balance level assertions, we're thinking about the two accounts that impact revenue the most. So we're thinking about our balance sheet. And when a sales transaction occurs, you're thinking about cash, or this sale could have been made on credit. Okay, so it could have been made in exchange for an account receivable, an IOU. Okay, so when you're thinking about the balance sheet related to revenue, the two accounts that impact this are cash and accounts receivable. So when we really drill into the account balance level assertions, we're going to think about documents that relate to these two account balances. And we think about transaction level assertions, we're going to think about anything that has to do with sales transactions that occurred. Okay, so this is really where I want you to zero in your focus when it comes to each of these transaction cycles, right? There's plenty of transaction cycles. Again, two of the most pervasive that you'll see on the exam is going to be revenue and expenditure cycles. Okay, so this is the bulk of, I mean, this to me is the difference between having a 50-60% chance of getting a question right and 70 to 80% chance. This is the difference. And I think this is where a lot of CPA review courses, for those of you who are, using multiple resources, sort of struggle to really emphasize. And that has to do with the documentation that is being tested. Okay, so when you're thinking about the documentation that is being tested, this has to do with the documentation that management is providing, that they're populating. Okay, so again, step one in our mental map is internal control departments. Step two in our mental map is the documents created by management. So when we're thinking about this slide, this is combining step two and step three, which to me is 50-60% of transaction cycles. The 70 to 80%, and more is the actual understanding of the test that can be performed. Like anybody can memorize that tracing is a test for completeness. Anybody can memorize that vouching is a test for existence. But at the end of the day, what is it that we are tracing? What is it that we are vouching, right? What is the documentation that we are looking at? Because the exam is not just going to say like, hey, which of the following is the best, is most likely a test for completeness. Maybe they ask that, but that's not how you prepare to get these questions right. You prepare by giving yourself a thorough understanding of all that they can test. What is it that they want you to understand? They want you to play auditor, and they want you to look at the information and say like, okay, what is it that I would do if I was auditing this client? What information would I look at? So you really need to take a step back and think intuitively here. You need to think about, okay, like where is it that I need to zero in on? What information do I really need to focus on if I'm taking a look at the client's financial statements? So three primary departments, and while there are, it depends on the client, and there are so many different industries that you could be auditing, but for whatever reason, the exam really loves to focus in on sales transactions related to inventory. Okay, there can be plenty of different scenarios. You could be auditing, a hedge fund, and they're not selling any inventory. They're trading derivatives and swaps and common stock and debt and things like that. But at the end of the day, for exam purposes, to prepare for this exam, we want you to really focus in on the documentation related to inventory related transactions. Okay, sales transactions related to, selling stuff. So three primary departments that I want you to focus in on, and that's going to be the sales order department, the shipping department, and the billing and accounting department. Okay, so when you think about this, step two rather, and the documentation creation part of our mental map, we need to ask ourselves, okay, what is the documentation that the auditor that management is creating for each respective department? In the sales department, they're creating the sales order form. Okay, and if it's a purchase made on credit, sometimes there's this purchase requisition department right here in the middle. And that's important to understand too, especially when it comes to receivables and questions related to that. But a lot of times the sales order is just, made in exchange for cash. But at the end of the day, you need to understand for testing purposes, for the auditor's testing purposes, the documentation that's being created. Okay, so the sales order form is created by the sales department. The shipping documentation is created from the shipping department. Okay, so once, let's say this is Linda, she processes this sale, and she says, "Great, you want to order, 10 units of XYZ. Here's your sales order. We approved the transaction. We talked to the purchasing department or the purchase requisition department or the sales requisition department, sorry, and they've approved it. So we created the sales order. We're going to go ahead and move forward. And so we're selling this inventory, and now it needs to be shipped. Okay, so who's going to then be shipping out the actual stuff? So the sales order is going to go to, let's say this is Glenn in the shipping department, and Glenn is going to say, "Cool, this client now ordered 10 units of this stuff. We're going to go ahead and ship it, and because it's been approved and we need to deliver on the inventory." So what the shipping department is going to do is going to populate this shipping documentation. And what this is often referred to, and this is a buzzword for those of you who have pen and paper, and this is going to be also emphasized a little bit later, but I would write down a serially numbered bill of lading. And that's something that the exam really loves to use in terms of terminology. So a serially numbered bill of lading is sort of this document that has to do with the actual shipping documentation, right? It's serially numbered. It says, unit R648B has been ordered. We're shipping it out, add it to the list. It's, inventory has been moved. You could take it off the books. Transaction has been made, FOB destination. We can remove the inventory once it's reached its destination, et cetera. Okay, so the two documents that have now been created within the revenue cycle are the sales order form and the shipping documentation, right? The serially numbered bill of lading. And that's going over to the billing and accounting department. And this is our final party, right? And so this is where it all kind of comes together. And before, let's say this is Sarah, goes ahead and records this in the books and says, "Okay, this is a transaction. Let's put this in the sales journal so we can record this as revenue on the income statement." What's she going to do? She's going to compare all the documents up to this point that have been created. Okay, so she's going to say, okay, what it is that Linda created in the sales department, right? The sales order form is being compared to what Glenn reported and created in the shipping department with the serially numbered bill of lading and ultimately that shipping documentation. Now I'm going to compare those two and create this invoice. Okay, the invoice is going to the party who purchased this inventory. Okay, so she's going to compare the three, and if the sales order matches the shipping documentation, right, the serially numbered bill of lading, then she's going to create the invoice. And the three are going to be compared. And when we get into the expenditure cycle, there's this same process happens. And the three of these are going to be considered what's called the voucher package. But for revenue cycle purposes, go ahead and ignore that for now. Because the voucher package has to do with purchases and expenditures. Okay, but same process. These three documents are going to be compared, and ultimately they're going to be sent out. Okay, so now we have attacked steps 1 and 2. Okay, and now that we have gone through that, and this is straight from the Universal textbook. This really kind of breaks it down into a little bit more detail. What we just talked about, the sales department is going to be sending out the sales order once they place the order to the shipping department. They're going to send it out, and the billing department is going to compare the three. So the three documents that I really need you to focus on are going to be sales documents, shipping documents, and invoices when it comes to the revenue cycle. Okay, so now we're going to get into the actual audit work. Okay, so when you think about each of these assertions, again, it's going to be tempting to just memorize the specific test. And while there are multiple tests that are applicable to each assertion, there isn't just one size fits all test, no matter what. So what's going to be important is that you understand, yes, the primary tests, and there are little things that inevitably you will have to memorize, just because, there's just certain things that are definitively tested and that they love to test, and it just doesn't make sense to really spin your wheels on all the different types of tests when there's a specific test that they are looking for. For example, we're thinking about, and this is specific to the transaction level assertions. at a later point, we're going to go down and talk a little bit more about certain account balance level assertions. But again, previously, when I talked about the differences in transaction level assertions and account balance level assertions, we mentioned that the transaction level assertions have to do with the with revenue, right, on the income statement. So thinking about the 5 primary assertions related to revenue, management is saying that everything is complete, right? That's what the completeness assertion is saying. And when it's saying that, it's saying nothing has been left out. Everything that you see in our source documentation, right? Maybe it's the bank statements, maybe it's the sales journal. Everything has been completely reported in the correct time period. Okay, so we're not leaving anything out. This test isn't going to be necessarily as critical to the auditor, or this assertion rather isn't going to be as critical to the auditor when it comes to revenue, because it's very rare that the client is going to be leaving revenue items out, right? They have no incentive to understate their revenue. But that is what the assertion is saying, and we do need to know it. So this is really where understanding the documentation is going to come into play, okay? Because when you think about the completeness assertion, the first test that should come to mind is going to be tracing. It's not every single time that tracing is going to be the appropriate test, but for many transaction level assertions, tracing is going to be the appropriate test for completeness, or at least the primary test for completeness. So again, this is where we need to really zero our focus in on the different documentation that has been created. Okay, so what were the 3 primary documents that were created? The sales order, the shipping document, and the invoice. These 3 documents are telling the story to the auditor. So now when they're testing for completeness and you're thinking tracing, this is the difference in giving yourself a 50% chance of getting the question right and a 70 to 80% chance of getting the question right. Okay, so when you're reading through a question, it says something like, ABC auditors are auditing XYZ client, and they're testing for revenue. What is the appropriate test? They're going to give you something like tracing, but they might say tracing the purchase orders to the sales journal or the purchase orders to the purchase journal. Yes, tracing is the appropriate test, but it's not the test that is specific to revenue. That would be a specific document that would be tested for expenditures instead. Okay, so it looks like we're going to have to upgrade here at a certain point, but we're not going to worry about that. All right, so tracing. So when you're thinking about revenue, you're thinking about what is being traced. We're tracing the sales orders, right? This is what was created by Linda, right? Linda created the sales order form. And we're going to trace that to where? The next step, right? So once the sales order form was created, it was sent to the shipping department, where eventually the shipping documentation is going to be created and ultimately sent to the accounting and billing department. So the sales orders were created and sent to the shipping department. So that is being traced. As the auditor, you're saying, okay, I'm taking my little pencil and I'm literally drawing a line from this sales order form to this shipping doc. And I'm saying, okay, that matches, that checks out. And then where am I going to take these 2 documents? Well, how about the invoice that Sarah in the billing and accounting department populated when she made this comparison, right? So we're making sure that Sarah did her job and compared the 3, right? She might've just, been ignoring her work, or maybe she's changing jobs and doesn't really care. And she just ended up, just not making the comparison, going through the motions, right? We can't always assume that people care about their jobs and they're going to do a good job, right? People, human error. So we're going to be tracing from the sales order form to the shipping document to the invoice. And we're saying, okay, cool, that all checks out. Was it properly reported in the sales journal? Yes, it was. Okay, so this is ultimately the report that is being, that ultimately we are using to create the income statement. So this can be thought of as the final report. These 3 documents can be thought of as the source documentation. When we're tracing for completeness and we're ensuring that nothing has been left out, we're going from the sales order form to the shipping document, to the invoice, to the report. Documentation to the report. Okay, so the cutoff test. When you're thinking about cutoff, you're thinking about the fact that all of this has been reported in the correct time period. So what's the risk here as an auditor? Well, the risk is that maybe management just, why would they want to, what could they do to overstate their revenue in year 1? Well, why not take a few invoices from January 1st, year 2 or January 2nd, year 2 and say, hey, nobody will notice. Let's just go ahead and include this in year 1. So a cutoff test is really an important one for the auditor because this is a great opportunity for management. When you think about fraud risk factors, you're going to think about, opportunity. This is a great opportunity for them to overstate revenue. Okay. And the way they would do that would be including invoices from year 2 into year 1. Okay. So again, the story that management is trying to tell here is that revenue is reported in the correct period. Okay. So super important. When we're doing that, we're thinking cutoff test always. And the good news about cutoff tests is they're pretty much the same for every single cycle. And they're always going to be necessary. And the question just becomes, all right, what are we comparing from period to period? What's the documentation that would be necessary to look at to make sure that that information is reported in the correct period? When it comes to revenue, invoice is a great document to look at because invoices, shipping documents and sales order forms, yes, while they do have to do with revenue, the invoice is actually the document that went out the door when we billed the client. So making sure that the invoice is in the correct period is going to tell us, the auditor, the story that this was in fact in the correct period. Okay, so making that comparison is key. When you're thinking about transaction cycles, one assertion that is important is existence and occurrence. Okay, so when we're thinking about transaction level assertions, we're thinking specifically about occurrence. So existence is sort of, the same thing in the sense that like we want to make sure that this event occurred, it exists. When we're thinking about existence, we're thinking more so about, does the documentation exist? Does the supporting evidence exist? When we're thinking about occurrence, we're asking ourselves, okay, did this occur? Did this transaction actually occur? Okay, so when we're thinking about that, we're working backwards. We're starting from the documentation itself, and we're going backwards to the source documents. Okay, so we're starting at the sales journal, right? If you think back on tracing, we started from the documentation and we worked our way to the sales journal. Now we're starting from the sales journal and we're going back to the documentation that was created by Sarah, by Glenn, and by Linda. Okay, so and this test is called vouching. Okay, so vouching is the opposite of tracing. When you're thinking about tracing, you can think of an arrow, right, going up. We're tracing from the source doc to the sales journal. When we're thinking about vouching, we could think of the arrow going down from the actual report to the source documentation. Okay, so thinking about that, we're going from the sales journal backwards. We want to make sure that this event that is reported in the sales journal actually occurred. How do we do that? Well, does the documentation support the fact that it did occur? Okay, so going from the sales journal backwards is going to tell us that story. If we say, okay, this revenue, this sale took place on, November 30th. Okay, great. That's in the sales journal, but how do we know they didn't just make that up? Well, if we work backwards, we see that this transaction actually occurred because the invoice says it did, the shipping document says it did, and from the point of initiation, the sales order forms says that it did. And then finally, our accuracy, that's the second to last one, is accuracy. Valuation, allocation, and accuracy is an assertion that management is basically saying that the information is the correct number, right? The amounts are accurately reported. And how do we do that when it comes to revenue? And comparison is going to be something that we can do, okay? But we're basically making sure that what is reported is the correct amount, okay? So again, yes, while you can memorize comparison is your test, that's not what you need to think about. You need to think about what is it that we're comparing, and focusing back in on the documentation that management created is going to be how you get over that hump and you can understand what it is that we are comparing, right? Understanding the documents that are being tested is ultimately what is the key difference here. So the invoice is the key document that you're going to think about. The invoice was created by Sarah in the accounting and billing department. That's a document that is related to sales. So if she's going to make sure that the amount is correct, what would she compare that to? How about the price listings? Okay, so if you're thinking about a listing of all the prices that management had when they were selling this, right? Maybe it's on their website, maybe it's a retail store and it's e-commerce or something, whatever. Making the comparison of the invoice to the actual price is going to give you that understanding that the amounts are accurately reported. Okay, and yes, there are other tests that they can perform, and it is important to go through the other miscellaneous tests. But this is just really more broadly to get you to focus on what specific documents have to do with revenue. Because you could think intuitively about the tests that they could perform. Like it makes sense to make a comparison, to vouch, to trace. But unless you know what it is that they are tracing or comparing or vouching, it's going to become very difficult, or it's just going to really set you up, for a trap. They love to trick you and say like tracing is the correct answer choice, because you're tracing from this to this, and you memorize tracing has to do with completeness, or vouching has to do with occurrence or existence. But unless you know what it is you're tracing or vouching, you could get yourself caught into a trap. And the last test related to the expenditure cycle, the revenue cycle for the transaction level assertions is understandability and classification. Really quickly, these are sort of more broad tests, but we're basically trying to make sure that everything is classified in the correct account, right? Everything is related to revenue is properly classified. Everything that has been reported is understandable to the financial statement reader. What is it that we would examine? How about the invoice? Okay, so understanding that by examining invoices will give you a good understanding as to whether or not this is actually revenue that has been reported. Okay, so we'll wrap it up with that. We have some homework questions that we're going to upload here shortly after. And we also created some focus notes. So we're also going to put up this pitch or this deck that we just ran through. If you want to go through it, you want to take a crack at this example question and take a look at the solutions down here, that'll give you a good idea. But the idea here again is that we're going to focus your attention on very specific topics that are going to be extremely important to understand related to the actual exam. Okay, we're thinking about doing more of a structured program a little bit later on that has to do with an actual weekly cadence to prepare you for the exams itself, but that's still something we're working on. For the time being, this is really just going to be meant to hold you accountable every single weekend. Make sure that you get on these lessons or these group tutoring sessions. If you can't make it, feel free to reach out. We can make sure that you have everything you need. Yeah, make sure that you're taking a look at the recordings of this. If you still have questions, use this as a resource going forward. Because I've worked with so many students over the years, and I've seen where it is that they get tripped up. And I've sort of understood how a lot of people's brains work when it comes to under this. And audit is a section that I hold near and dear to my heart. I basically had to teach myself audit. I struggled